All right. So in the previous live stream, I talked about dollar, talked about euro, GU, and I also talked about gold as well. And in this live stream, I'm gonna talk a little bit more about gold because I said I was gonna dive a little bit deeper into the structure of gold. And so far, you can see that overall, we've been making overall swing lows and swing highs and swing lows and swing highs. Now, we made this low right here, which wasn't lower than the previous low, and then we created a high within the range as well. Now, if you use your Fibonacci and run the Fibonacci from this low to this high, you will see that above this equilibrium is premium and below this equilibrium is discount. And all the while we've been in a premium position, all you should have been looking for was for the market to go to the downside. And after it came into a discount, you can see right here, the moment we came into discount, the next thing that happened was an expansion. But because the target to the downside hasn't been met yet, price still dropped down to the downside, heading closer to the key level that we were anticipating for price to come into. Now, right here is the key level that I'm watching. You can see we made a low, a high, and then a low, and then a break of structure. That is why I'm anticipating for price to come into this key level. You can see the black line, that is the high, the previous high that got broken. I need to see a retest within that zone. And once a retest occurs within that zone, all I'll be looking for is a 5-minute shift to market structure. All right. Thank you so much for your confirmation, Peter Mosey. I'm gonna look at all right, can you check again and confirm with me if you can hear me clearly? If you cannot hear me, please let me know again so I can see if there's anything wrong with the audio. All right, thank you. Thank you, Peter Mosey, for your confirmation. All right, so I was talking about gold, my analysis on gold. And right here, you can see we have the swing low on the swing high, and then we'll have a swing low that created this overall swing high. So we're walking within this range low and this range high. And as you can see, price didn't create a lower low. And then right here, it didn't create a higher high. So it's creating a low and a high within this overall range low and range high. And if you use a Fibonacci from this low to this high, you will see that right here is our premium, right here is our discount, right? Now, I'm going to remove everything on my charts on gold because I need everyone to understand what I'm trying to show you here because this is going to provide us with a beautiful trade entry as well. So right here is our low and our high, our low and our high as well. Now we're within the range, this range low and this range high. And if you use a Fibonacci within the range low and the range high, you're going to see that right here from this equilibrium to this high is our premium. And when price was at premium, you can see that the best thing to look for would have been a sell. That would have been the higher probability trade setups would be in a sell. And the moment we came into this discount position, that is the reason why, in as much as we've not tapped into my key level where I want to buy gold, I'm still not going to try to sell it into that key level because we are in a discount position, right? Now, another thing I talked about is how to determine the extreme discounts that can provide you with a high probability setups. What you do, you use the Fibonacci and you run the Fibonacci at the discount position right here, just like I've done it right now. Use it to run it like this. Then you run the lower part of the discount like this, and you run the higher part of the discount like this. Now, once you've done that, the next thing you do is you use this to mark out the second lower part and the second, like just like this, exactly like this. So from the lower part, the second one, and from the higher part, the second one as well. Now you can remove the entirety of the Fibonacci because you don't really need it anymore once you've done this, because all you're using this to do is to outline the key levels where you want to see price come into. And as you can see so far, price has tapped into that key level, but it doesn't mean that we're just going to jump in the moment it taps in. All we now want price to do is to come into our point of interest. And our point of interest in this case is right here. We'll have this high. I'll mark that out. We'll have this high right here. And then we'll have this low as well. And then this is the overall high that got broken. So you can see after we made the low, price made an impulsive move to the upside, dropped down, took liquidity, broke structure. So this is the structure that got violated. The structure right here got violated. So we're waiting to see price come into this key level. And once we're in this key level, all we want to see is a 5-minute shift of market structure or a 4-minute shift of market structure. And we will execute and look for our buy setups. So you can see that very clearly. And this zone right here is an extreme discount zone. And in the moment price comes in here and we look for that buy and we see it, we take it. Where we're going to be targeting is for price to rally above these highs. All this right here is liquidity. We'll be looking for price to rally above this liquidity. Every single high right here, my opinion, is liquidity, and I'll anticipate for price to rally above these highs. So that being said, we go back to the 4-hour time frame to look at it, see what it looks like. And our exit position is going to be right here, the consequent encroachment of this wicks. Right here, the midpoint right here is going to be our exit. So if we should get into any buy setups from here, we'll exit right here. Now, it doesn't mean that this is where I'm anticipating for price to stop going to the upside. It simply means that this is why I want to leave the marketplace. I'm anticipating for price to rally above this high overall, but in the meantime, it doesn't mean that I have to hold on to my trades to rally above this high, because this high right here is going to be a high resistance liquidity to run, but getting into the consequent encroachment is going to be easy. It's going to attract price into the upside. And if we measure from this zone to this high, that is about 11,000 pips. So, which can literally deliver a very huge profitable trade idea for everyone who's watching this right now. You can mark this out on your chart as well, because I'm going to be watching it. And when price comes in there and shows me what I'm looking out to see, I'm also going to share the trade idea with all of you. So that is my analysis on gold. I said I was going to throw more light on it. So anyone who hasn't been here when I talked about my analysis on gold can also get that as well. So we're going to look back to Euro US dollar, see what Euro US dollar is doing. Euro US dollar has already tapped our high probability key level for buys, but so far it hasn't come into our entry position, where we're also looking forward to see if we can get a re-entry position. So right here, we're still waiting. And until then, we'll just be on the sidelines. And if price doesn't come there and rallies to the upside, then it means we miss the trade. But for me, I never jump into the market. I never FOMO. All I want to do is to wait for the market to come to me. That is what I'm always doing. I want the market to come to me. And once it comes to me, I will now execute. And if it doesn't come to me, then it means that trade isn't for me. So that being said, we'll look at USD card, what I'm looking forward to seeing USD card as well. I'm going to use a fresh chart. So for USD card, first of all, if we look at the 12-month time frame, the first thing we see right here is this inefficiency resting right here. This could act as a draw on liquidity to attract price to the downside. The next thing we do, go back to the monthly, and then we want to see what the market structure is looking like on the week, on the daily. And right here, we can see price has consistently been showing us bullishness, high, low, higher high, higher low, then a higher high, and then we'll have this higher low right here, then a higher high, and then we'll have this higher low right here, have a higher high here. And after that, price expanded really nicely to the upside, creating this higher high. So right here, you can see our higher low and our higher high. And this was the last move to the upside, to the downside before an expansion that broke this structure. So this is a key level to take note of. And now if we check from the bodies of the candles, now you can see that price has actually tapped into that key level before we saw this expansion. Now you can see this high right here. After the expansion to the upside, after tapping into this key level and expanded to the upside, we came to the upside and we took liquidity from this high, right? After we took that liquidity, what did we do? If we go to the weekly time frame, we see that after the liquidity was taken from this previous daily high, previous weekly high, look at what happened right here. Price created this low and this high. And then underneath here is a shift in market structure. Price dropped down, breaking this weekly low, right? Now, after breaking this weekly low, we can see the inefficiency. And then if we go to daily time frame, this was the last impulsive move to the upside. This right here, last impulsive move to the upside that then dropped down to break this previous low. So this is our key level that we're working with. So if price comes into this key level, we'll be looking for sells for this to go to the downside to run this sell side liquidity right here and also tap into that 12-month inefficiency. So you see how this aligns from going from the 12-month time frame to the monthly to the weekly to the daily, understanding what price is coming to mitigate and why it's coming to mitigate that key level. And what else do you see here? We see an inefficiency. And if we go to the 4-hour time frame, what do we see? We see an inefficiency resting right here on the 4-hour time frame. So all we want to see from this inefficiency is a 15-minute shift in market structure. And right here, even though this is a very lethargic price action, but as you can see, this is the high, created the low, created this high, and then we eventually broke structure right here. So right here, we broke structure. What you're looking for is the last impulsive move to the upside before a break, which is this. You outline that, and then we wait. The only thing we're going to do now is to wait. So if this is a valid trade, we want price to come into this key level. And once it's in there, we want to see the 3-minute shift in market structure. And if we do see a 3-minute shift in market structure, we will engage in USD card and sell this to go to the downside. And we will be targeting the overall low that I outlined on the daily. We'll be targeting this low to get taken. But within this range, we're going to be taking profit. So this is my analysis on USD card. My time is up, and I appreciate every single one of you for tuning in today. If there's anything I said that you don't understand or anything you need more clarification on, I'll be on the charts to answer all your questions. Thank you so much for tuning in, and I'll talk to you all next time. Have an amazing day.